Donald Trump didn't just hang up on Switzerland, he slapped a 39% tariff on its exports and dared it to fight back. What was supposed to be a wrap-up call between Trump and Swiss President Karen Keller-Sutter in late July turned into a confrontation. Accusations of stealing, threats of even higher tariffs, and within hours, Washington had imposed one of the steepest rates in the world. For Switzerland, a country built on stable rules and quiet diplomacy, it was a jolt. For Europe, it was a warning. In Trump's America, no partner is safe from becoming a target. Trump's case was simple. The United States ran a $38 billion trade deficit with Switzerland in 2024, the 13th largest in the world. But here's the twist. It wasn't watches or chocolate behind the numbers. It was gold. Bars moving from London to New York via Switzerland for refining and resizing created an artificial spike in the trade deficit. Economists knew this was statistical noise. Trump saw it as proof of cheating. Bern tried to cut a deal. Swiss companies would invest $250 billion in the US if tariffs were dropped to 10%. Talks seemed promising, until that July phone call when Trump rejected it outright and upped the rate. The problem? Switzerland had little leverage. Its tariffs on US goods are already near zero. Its market is too small to hurt the US with retaliation. And unlike the EU or Japan, it can't throw billions on the table for concessions. Some lawmakers even suggested cancelling the order for 36 American F-35 jets and buying French Rafales instead. The government quickly ruled it out, citing defense needs. Instead, Trump's tariffs have pushed Switzerland toward Brussels. The country has long relied on bilateral agreements with the EU for market access while staying outside the bloc. Now, some politicians see that as a weakness. Liberal voices are calling the US an unreliable partner. Green leaders accuse Bern of kneeling before Washington. EU membership is still unpopular, but support is growing for a new third bilateral agreements package signed in December 2024. It would deepen integration, require adopting some EU laws, contribute $375 million annually to poorer members, and limit immigration controls to severe economic crises. This shift aligns with another trend: closer EU-Swiss cooperation on securities since Russia's invasion of Ukraine. In both defense and trade, the logic is the same. Small countries can't stand alone when the rules no longer hold. A dispute over gold bars has turned into a geopolitical lesson. Switzerland may not join the EU tomorrow, but its political center of gravity is shifting toward Brussels. Not out of love for European unity, but out of necessity. In the age of tariff diplomacy, isolation is a luxury no small nation can afford. If you found this breakdown useful, hit the like button, subscribe for more deep political and economic analysis, and visit westernrelations.com for articles you won't find anywhere else. Thank you for watching.